Good. Welcome, everybody. Welcome back. I hope you made new friends in your pre-VANTEC networking breakout rooms. Okay, so we're going to get started here. Let's get this show on the road. So my name is Felzel Lee. I am your host for this afternoon's festivities. We're going to be running some presentations on the investment trends and some industry panel discussions between now and 3 o'clock. And then we're going to have a short little break before we get into our VANTEC programming of the announcements from the community and presentations from the companies. So all square with that. So first up, I'd like to introduce Steve Hansen from Raymond James. So Steve, if you're there, say hello to everybody. Everybody say hello to Steve.
Hey guys, how you doing? Just bear with me one moment and I will share my screen here.
Great. So Steve is going to share trends, opportunities, and examples of why investing in ag tech and food tech is a rapidly growing sector and very rewarding sector. Take it away, Steve.
And you can see my slide okay, I presume, Felzel, just to confirm?
Yes. Yes.
Great. Okay. Well, thanks, guys. So my name's Steve Hansen. I'm an equity analyst at Raymond James, covering the transport, chem, and ag industries. My day job, in effect, is, just for context, is really focused on making investment recommendations around the respective industries in the public sector. So publicly traded companies like Nutrien, for example, CN and CP Rail, which should be bellwether names you'd probably be familiar with here in Canada as well. But in I'd say the last 3 to 4 years, I've been spending a lot more of my time in the ag tech space with younger emerging companies that are growing up and raising capital as they scale. So that's become a much more important part of my day job, if you will. Really focus here today on a couple of key trends and macro themes that we're seeing across the landscape right now. To be clear, I think the data that I'm going to show you today is really just a collection of data across the landscape up to June 30th. So for the first half of 2020. And of course, this was not a normal period given the onset of COVID here, but despite a pretty horrific headwind, I would say, to the industry, as the chart suggests here, we still funding continued to flow. And so you'll see here 10.8 billion of investment, roughly 800 deals through the first half of the year. That is effectively 50% of the funding that was raised in 2019. So I'd say a good start to the year despite COVID. Now that being said, as I'll get into here a little bit later, would just note that like the equity markets more broadly, deal flow has rapidly accelerated since then. And I think we'll see that reflected in full year deal flow when those metrics are ultimately due. The point of this slide is just to demonstrate a couple of points. First is just where the bulk of the funds have been flowing this year. Second is to show where we've seen a few changes in the pattern of the allocation. A couple of obvious highlights. E-grocery is still number one. They've been a big beneficiary of COVID and the lockdowns. If you're like me, you've probably ordered a lot more online lately. And so we've seen some big deals come about as a result of that. Miss Fresh raised 500 million, Instacart was 200 million, just for some reference. Logistics and supply chain, though, continues to be very topical. This has everything to do with tracking goods and moving goods throughout the entire top to bottom ecosystem. Traceability and food waste also continue to be very topical here. The third one, though, is probably the one that's been the breakout category of the year for those of you following it. This whole push towards, it's called innovative food, but it's really alternative protein and sustainable protein that's captured everyone's imagination this year. And that's a broad spectrum of products, right? So you've got your plant-based proteins that many see now probably on your grocery shelves, but you've also got insect-based proteins for animal feed, and increasingly a lot of funding flowing into the idea of culture-based protein development effectively being developed in the test tube. And we're seeing some big funding flow into that space recently. Now, as I suggested, the challenge with the data I showed you earlier is that it can be skewed by some really large deals. And so the purpose of this slide is really just to demonstrate the rankings do look a little bit different if you're looking at it just on a deal count basis. Would just point out, for instance, I don't know if you can see my cursor here, I apologize, but e-grocery, for example, was #1 in the prior slide. It's #4 here. Inversely, retail and restaurant technologies has captured a lot of deals, even though it's less dollar value. It was #5 in the prior slide. Logistics and supply chain, though, either way, has been at the top of the bucket effectively. But again, just to reiterate the point that I made at the outset, 800 deals in the first half of roughly of 2020. It's a good clip given that COVID was the backdrop, right? So I would suspect, I haven't time dated all these, but I would suspect that the bulk of them were completed January to March. This is just really, this chart just demonstrates, the same number of deals, but in a slightly different way. And so really what it's showing you here is that the median deal size is quite small still. So you do have a number of large deals that skew the averages up. And you can see that in the gray bars, but if you look at the median deal size, the bulk of those 800 deals are still being done at 1 to 5 million. So the way to think about it is we're seeing, plentiful deal activity across the full spectrum of categories. This was one that I was trying to struggle a little bit with trying to understand how to present it to you. All of the valuations, of course, in the private sector aren't perfectly public knowledge domain, but we do have a number of markers that give us a sense for where different deals have traded. And so the goal here is just to suggest that the industry is growing up. There's a lot of small early stage activities, as I just referenced, but we are seeing now a much larger set of deals and what I'll call super majors evolve in each of the major categories, many of which are now boasting unicorn status. So top left just gives you 7 or 8 names there that are all officially unicorns now in the private realm. Many of those might be familiar to you. Across different verticals, I would note ag biotech lately has been quite topical and popular. The one distinction there, though, is not all those companies are purely ag or food. They often have platforms that do a number of different things, including, different just basically biological drug discoveries. So there's not a perfect comparison, but certainly some of them are directly ag related. On the right-hand side, I've just listed a number of names that are what I call the baby unicorns or the unicorns up and coming. Again, don't have perfect metrics for all of those, but would just point out that they all do have valuations at 500 million or above. And that, of course, includes one of our local favorites, Semios. So many of which you probably know if you're local here. Would also just highlight, though, that's through the first half of the year. And so if you just look at some of the headlines we've been seeing, and you refer to the bottom of the slide here, and you just look at the cadence that we've been seeing as some of the size of the deals that are showing up, clearly the market is starting to think bigger and attach bigger values to some of these enterprises as they look to scale. I'm not perfectly convinced all of them are worth what they're saying they're worth necessarily, but they're clearly taking advantage of market dynamics right now and raising value. Would just note for you as an example, we've seen AppHarvest recently go public through a SPAC. That's become a very common vehicle to go to market lately. They raised $475 million at $1 billion valuation. This is a company with 0 revenue through till the end of next year. They're building a new greenhouse effectively, and they plan to have 9 greenhouses by 2024. They have 0 today, but they have a $1 billion valuation. That just gives you a sense for what's happening in the market. Now, it's not just the private sector realm, to be clear, right? So, this is just a small subset of companies that have come public in the past, some of them quite recently. I would argue Beyond Meat really paved the way here in many respects in the US, but we've since seen a number of other players come to market, raising, large sums at quite lofty valuations, frankly. And so would even just point out 2 locals here, for example, top right, bottom left, those are both venture listed names here in Canada. The Very Good Food Company might be one that you're familiar with. They presented at VANTEC last year, I believe, if I'm not mistaken. So they now, in very short order, have a $350 million market value. So you can understand what kind of incentive that creates for companies to come to market. So I suspect we'll see more to come. And I would just note here, there's been others. This is just a quick subset of names that we drew on, but I mentioned AppHarvest already. If you're familiar with Laird Superfood, that's another one that's gone public. I believe it's a $450, $500 million valuation as well in the US. The intention here is really just to highlight some of the subsectors that I highlighted earlier and some of the sort of the higher profile deals that have happened through the first half of the year. On the left-hand side, in innovative food in particular, I would just highlight some of the key themes that are really driving this, and highlight the importance of that sort of emerging category. Again, there's more capital raised in the first half of 2020 than all of last year in that category. And we're seeing a wide, diverse range of deals in all different aspects that I mentioned earlier, whether it's plant-based ingredients, the insect and sort of, I'll call it insect rearing, if that's the right word, whether it's soldier flies or mealworms, as well as the culture-based product. Culture-based or lab-based meat, as people like to call it, has really come on strong just in the last 6 months. And would note here, just in sort of that context of, newer food, it is interesting to me to see how quickly the category has evolved from venture capital to large-scale pension funds. And so CPP, if you're not familiar, took a large stake in Perfect Day earlier this year. So I note here. Just on the right-hand side, we just really wanted to make the point that the deal flow activity in that space is really accelerated since COVID. I think the one thing COVID has done is expose the frailties of our supply chain, particularly around fresh produce, much of which comes from Central Valley in California. Labor has been a real problem for the industry across the board, migrant labor in particular. And so everything around that, whether it be local origination, automation, robotics, anything to do to help with sort of that broader issue or pain point, has become very topical, and we've seen a number of deals flow as a result of that. I mentioned AppHarvest already, but as you can see here, we've got a number of other players that have also started to raise capital in and around that. And some of the junior or the baby unicorns that I had referenced earlier, if you recall, many of those are in that same, we often say it called CEA or indoor growing environment. Just a few other key themes here. I won't belabor all of them, but just wanted to point out that the biotech space is starting to attract a lot of interest. Again, a lot of platform-related deals, big dollars. Not always ag, but they are certainly ratcheting up on the cap spectrum, if you will. 2 or 3 players just recently have crossed that unicorn status. And on the right-hand side, sensing and remote IoT has been a big focus within ag tech for a number of years. We did see a slowdown in the total funding to that category this year, but that's really just more of a shift. Many of the large existing players that got out of the gates early have certainly scaled up, and they're still raising capital, but they've started to slow down a little bit. Whereas now we're seeing a lot of younger emerging companies coming up in different niches, because a lot of the initial focus is on the big row crops. But now we're seeing IoT sort of being applied to a broad range of different categories. And we just note again here, Semios at the top end of the range. They finished that $75 million round in February by memory. Just wanted to flag, lastly, before I move on, some of the emerging themes here. There hasn't been a lot of capital raised here just yet, but these are 2 that I wanted to highlight in particular. So I've kind of grouped this all together, but I'll just say regen ag and carbon credits as 2 sort of areas. A little bit blurry, admittedly, but we're seeing, just as you can see by these announcements here, a number of different existing players in the market either branch out, spin off, or raise additional capital for this push. And so it's been evolving very quickly. As you'll see here, this set of announcements is really just since September. And as you'll note, I guess that one is July. But we've seen a number of these large players dedicate real capital to this. And so we're starting to see some of the economics pay off. Indigo has really driven this process, frankly, and they've been able to monetize it to some degree. But FBN is spinning out, and we're seeing some of the large super majors now commit to capital on the other side. So I just wanted to flag that as one to watch. I raised the ocean here, interestingly enough, because some of the dedicated VCs in the space, again, dedicated ag tech or food tech VCs, have started to raise new capital around the ocean now. And it's not purely Agrifood per se in some people's minds, but I kind of perfectly classify it the same. And I think we're going to see more of that to come. I know there's one gentleman here on the seaweed side, for example, in the audience, but there's others that I think will come. This is an area that's wide open. There's really not that many companies that have evolved into this side of things yet, whereas the other space is getting, I'll call the traditional ag food space is actually already quite crowded. So, I would expect we'll see more companies evolve there if they can generate good business models. And then just lastly, if I may, is I think this is often lost on people. I know everyone in the startup realm thinks about, their technology and their story as being immune to some of the macro forces because, they can get into the market in a relatively small way. But ultimately, the macro drivers are important. And so I've just highlighted a few of the key crop prices here. They have been headwinds for probably the past 18 to 24 months or longer, depending on the commodity. Farmers have struggled. In other words, there's been trade wars domestically with China, as an example. We've had crop issues, and we've had a number of other issues that have gone with that. That's made it very difficult for farmers. But the good news is we're seeing a big turn on that, and I wanted to flag that for people, just so they understand a combination of multiple factors, weather, just trade surplus changes, to some degree, real challenges with weather, in particular with our largest partner, China, to the point now where they are moving or importing huge amounts of product. A lot of the press earlier this year focused on how they weren't living up to the phase 1 of the trade agreement, and that was absolutely true. But the movements we've been seeing over the last 6 to 10 weeks are off the charts. Chinese corn prices on the Dalian exchange have hit record levels. They've had a number of typhoons that have hit the top corner of their country, which is the big breadbasket, and their corn reserves have been whittled way down, and they're trying to rebuild their hog herd fleet, hog herd post African swine fever. So it's a nice tailwind, frankly, for a lot of players, particularly with emerging companies that are trying to get farmers to spend a little bit of money on trialing their product. I think this will be a nice tailwind. And I will leave it there for any questions.
Thank you so much, Steve. Any questions for Steve? If you're shy about speaking up, you could type them into the chat, and I'm sure Steve will answer them. I will ask just one question, Steve, because you focused a lot on macro trends and such. Is like, if we were to take Canada as a brand, is there a competitive advantage for Canada in this space?
The short answer, sadly, is I don't think so yet. I would say we have all the right ingredients. I think the ecosystem here within Canada for ag and food tech is really evolved and developed in the past couple of years. And just by virtue of seeing the success stories out of places like Vancouver in the last couple of years, you've seen some real players emerge, right? I don't need to go through the list, you would know it. But I think still on a relative basis, the capital pool is small, it's unorganized. It's just not focused enough on the specific vertical. But if you think about our ties to ag historically, and certainly our ag industry, the institutions we have like PIC now and some of the government agencies, I think we really do have an opportunity to, put a stamp on ourselves as a real competitive advantage. But I just don't think we're there yet, also, unfortunately.
Oh, that's too bad. Canada traditionally has ag biotech as one of the top sectors because, that's how we became one of we are the biggest wheat exporters in the world. And that's because of our ag. And then we have our digital supercluster based here in BC. So hopefully there's something out of there that might be applicable to the ag tech, food tech space.
No, I mean, I think, again, to my point, I think we've come a long way in the last year, and PIC and the super clusters are a big part of that for sure. Some of the, there's been CDL has played a new role, an evolving role as well. And even some of the large corporates like Nutrien are spending their time on nurturing the next sort of cohort, if you will, of the ag tech universe. And I think that's really important. You need to have all different facets of the ecosystem working. Other areas already have that. So we're getting there, and I'm hopeful.
Okay. Well, thank you very much, Steve. Everyone else, if you have questions for Steve, please type them up in the chat. I know Steve would be happy to answer them for you. Okay, next up, we're going to have a couple of panel discussions and dive a little deeper. So we're going to ask Tom Urban of Agribusiness Advisors. He's going to have a conversations with the founders of New Peak, Future Fields, and Livestock Water Recycling. They all chose to join a foreign accelerator. So why did they? How did it change their perspective, and how did they benefit? So let's take a listen to Tom as he speaks with his panel. Tom, you've got the floor.
Fantastic. Thank you very much, and welcome everyone. So it is interesting, right? We've been doing this for a number of years, and we've always talked about the influence of markets outside of Canada. But this idea of joining an international accelerator is relatively new. And obviously, there are lots of them out there. There are general accelerators like Techstars, like Y Combinator. There are ag-specific things like Thrive and Yield Labs. And there are theoretically lots of reasons to do this. There's access to capital, education, content, services, mentors, networks, prestige, reputation, all kinds of stuff. But we've got an opportunity today to talk to 3 founders who actually went out and did it. And I'm going to introduce them very quickly because we don't have lots of time on this. And then I want to ask them some very specific questions. So quickly, let me welcome Karen Schuett, who works with livestock water recycling. And what they're doing is they're adding huge economic and environmental value to animal husbandry by treating livestock manure. Karen is sort of a serial accelerationist, if that's a thing. She's been through, I think, 5 different accelerators. So I'm excited to have her on the panel and get some really interesting insight into this. Second one is Anshul Porwal, who works and founded New Peak Robotics. New Peak is developing robotic harvesters initially focused on the strawberry industry. I think that fits into some of the trends that Stephen was talking about. And lastly, Ledji Gafoor, who is the CEO of Future Fields. And what Future Fields is doing is they're developing low-cost growth media to really enable the cellular agriculture revolution. So again, right on point with a couple of the key trends. And Anshul and New Peak Robotics participated in HAX, which is a hardware accelerator out of China. And Ledji was one of the privileged few to be able to go get accepted and come through Y Combinator down in the Valley. So with that, I would like to ask a question to the 3 of you, which really is, why did you look, right? There are certain resources, but why did you look for an opportunity outside of Canada, and how did that come about? And why don't I start with with Karen, our serial accelerationist.
Thank you, Tom. Really great to be here. I have to say that my reason for looking was because I was looking to raise capital and raise the profile of the business and to validate a new technology in the US market and build my network. I think those, just thinking about that, that's really off the top of my head why I was looking into the US for accelerators, and started in a couple of programs. And like you said, I sort of cherry picked my way through different corporates that we wanted to connect with and joined their accelerators that way.
Fantastic. Maybe Ledji, you can go next.
Yeah, nice to meet you all. Yeah, in our case, the motivation was really to be able to learn from a broader range of experience and business culture, especially us being in the cellular agriculture industry, it being new, more related to biotech. We were looking globally for that expertise to help us get closer to our customers, and of course, to get a broader range of investment opportunities in us as well. And it really did give us access to those new markets and investors that, had we not reached out, would have been very difficult for us to get on our own without having somebody who's familiar with the Silicon Valley ecosystem in the case of Y Combinator.
So I think, unfortunately, we deal with this reality all the time, which is that we're not the biggest market. We don't have the biggest sources of capital. We don't have the big corporate sponsors. And so I think very often you'll hear this, I'm looking for access to corporate partners. I'm looking for access to markets. But Anshul, your experience maybe is a little different. Can you tell us why you were looking outside of Canada for an accelerator?
Absolutely. Nice to meet you all. One of the major reasons why we were looking for partnering outside was because, as a hardware-focused company where we are making robots, it's really important to have some kind of access in China where they can support you and help you build your hardware. So you can really focus on your business and on your tech and not really worry about that side of the things. So Hacks was really great for that. And in addition to that, it's also to get exposure to a lot more companies that are not in the Canadian pool. So like getting to see what the world is like outside and really getting to experience and learn more from the companies that are working outside. That was kind of like the major reasons why we decided to go with Hacks.
Yeah, it's interesting, right? And in terms of looking for a market and financing, the United States is obviously one of the key things. If you're looking to produce and you're doing hardware, almost everybody at some point in their lives is going to be going to China, either for small production or full assembly or whatever it is. So you're really kind of looking forward into what you're going to be needing down the road. So I would like to ask a sort of a couple of quick questions, which is, first of all, I'm going to ask all three questions, and then I'm going to ask it to each of the points. So I want you to rate your overall experience with your international accelerator on 1 to 10. And if you have gone through a number of them, Karen, you can give a few numbers. And then I'd like you to tell us what kind of the 3 key benefits or outcomes of that were, and the 2 biggest challenges or disappointments having gone through that experience. And so, Ledgy, why don't we turn to you first for your overall and then kind of some key benefits and challenges.
Yeah, for sure. Thank you. Overall rating, and for a bit more background, we were in Grow Agrifood Tech Accelerator as well in 2019, based out of Singapore. So it was quite a different contrast to Y Combinator. Y Combinator, I definitely have to rate that at least a 7 or an 8, because I can't argue with the results that it got us, being arguably one of the world's top accelerators. And Grow, still definitely a 6, at least, if not a 7. In the case of Grow, gave us experience and exposure to the Asia Pacific region that we for sure, being based in Alberta, Canada, in Edmonton, would not have had access to, especially our customers in Singapore. Really, the positives for both was really that global exposure to other synthetic biology players and companies. In the case of Grow, it gave us access to government representatives on the regulatory side to be able to better understand how our products might be received in that area of the world. And in the case of Y Combinator, of course, we got access to some of the world's top experts, whether that be for investment or for technology development in our case. One thing I definitely like to mention in terms of positives as well for both of them is team alignment. Is something that both accelerators gave us. In the case of Y Combinator, it gave all of us a common language with their well-known practices on what it means to chasing extreme growth. Recently with Y Combinator, we were part of the first fully remote batch. So in terms of challenges, with a lot of the accelerator experience being designed around being in person, speaking with these people, networking with other companies, we could definitely see that that was a lack and more difficult. That type of incidental conversation and problem solving that can pop up was absent when everything is a scheduled Zoom call and then it's just over. There's no more casual, friendly conversation afterwards, which was very prevalent compared to our time in Singapore, where there was lots of ample time to get to know the other companies and the other mentors. And that really showed through, I think, as long as things are remote, it will be more difficult to really get that one-to-one value with mentors and other companies.
Ledgy, just a quick question. Was there anything that you didn't like? Were they intrusive? Did they try to tell you what to do with your business? And if you didn't listen to them, did they get mad at you? I mean, what is these, you know, people who are trying to do this want real stuff. So what didn't you like about it?
Yeah, I would say they are extraordinarily prescriptive in their viewpoint in specifically how fundraising should be done. This came through in our interactions with speaking with investors in a different area of the planet. It did not go over well. Other investors in Silicon Valley, there's 100% what they expected. But we had a few arguments even with investors in the European region who disagreed with the breakneck pace that we were being put on. It was, are you in or out in a matter of 2 hours? Not a lot of time for really good due diligence on the investor side. That's probably one of the big takeaways.
So what you're saying is that San Francisco does not represent the rest of the world. Is that what you're saying?
Yeah, I would say that'd be a good way to put it.
It's staggering. Okay, that's super helpful. And so Ansel, I'd like to move to you quickly for the overall, and then kind of the highlights and lowlights of hacks.
Sure. So overall, I think I will give a current experience with hacks about 7 out of 10. And I think it would be closer to 8 and 9 out of 10 if not for COVID, because their program allows us to actually go spend 6 months in China with their group of engineers. And you get a lot of coaching, a lot of help, a lot of like hands-on help. So our experience would have been much better if you could have gone there in person. So the biggest challenges are kind of very similar to what Lechi was saying as well, that because now you have to interact with the people you're working with across different time zones, and now you have to do it over online, over Zoom, it becomes really hard to collaborate. So when you have to like tell people to do some work for you and it's remote work, the challenges become quite big, and managing them and making sure that things are on timeline. Apart from that, like with hacks, like at least their office in Shenzhen, like the engineers they have, there's a bit of a language barrier as well. You have to be cognizant that if you speak fast or if you speak too complicated of an English, like the message might not get through. So you have to be always on top and make sure that they understand what you're trying to get across, and they're on the same page as you are. So those were like the biggest challenges we faced. But in it, on the flip side, the biggest advantage we got from this experience was that the hardware we're developing right now is very close to what the market-ready product would be. And we wouldn't have been able to iterate on it as quickly as we have been. So in 6 months, we went from our first prototype to a current prototype that looks like it's ready for the market. And if you look at it, it looks like a professional product instead of something you would have duct tape together in your basement. And all of that has happened because we get access to cheap labor and the incredible amount of resources you get in China for producing your parts, which otherwise would not have been possible. And apart from that, like there's also a huge benefit that comes with getting your stuff from China, which is that our hardware now is about 10 times cheaper if it was manufactured in China versus if we had worked with manufacturers here in Canada. And that saves you a lot of money. And when you're cash that startup, it really makes a huge difference.
So I think what's interesting is that you're saying that these guys actually did work, right? There are different kinds of accelerators. There are people that can give you lots of mentorship and they talk to you a lot about it. But these people had engineers that were working on your stuff and they were sort of being directed by you. So I think that's an interesting for all the people who are looking at the various benefits of accelerators. You got to look at what do you want to get accomplished and how do they help you do it. But we're time constrained here, and I want to get to Karen and listen to kind of the same thing, the overalls, the goods, the bad, and Karen, I'm going to put you on the spot a little bit because in our conversation, you said that there were some accelerator opportunities that you chose not to do, and I think why you choose not to do things is as much, if not more, instructive than why you do it. So I'll leave it to you.
Okay, now I'm on the spot. Okay, thanks, Tom.
Okay.
I'm going to talk, I think maybe generally, if I want to talk about a rating scale, I would talk about Thrive because it's probably most relevant being an ag tech, a general ag tech accelerator, not too specific. Some of the other ones that we did We're Dairy Farmers of America, very specific to dairy products. But Thrive is overall ag tech. I was going to give it a 10 or a 9, but here we're giving Y Combinator a 7 or an 8. So maybe now I feel stupid. So I'm going to give it high marks. I'll just say that. Probably the best thing it did for us was give us access to the US market, access to corporate partners, access to the networks that we needed to be talking to. There was no way we were going to have an avenue into the CEO of Land O'Lakes without Thrive. Or into the National Pork Board without these guys. We came from Calgary. We came from water treatment, actually in oil and gas. So getting into the ag tech market, we needed a launching pad. Thrive was an excellent one. Really gave us a good connection to everyone. I would say overall, again, I just kind of would echo that, fairly prescriptive about how they're an American group, so they have a way of, how you fundraise, how you set up your business. And so, we had to take in information and feedback and think, okay, how's that really going to work for what we're doing? And then overall, I think there was so many benefits. It's hard to go through them. At the same time as I applied for Thrive, I applied for Yield Lab, and we got accepted into both. And they both said, you can go into both of our accelerators. But for me, I felt like, as the CEO, it was going to be too much to do 2 accelerators at one time. I was, not going to have time to run my business. So we had to not take Yield Lab and take Thrive. We did that because Thrive was connected to pork and dairy industries. And so they had the best connection in corporates for us to be with. We also applied to Techstars and were accepted. However, we were just a little far along down the fundraising path, and it didn't really make economic sense for us to go with Techstars. So just to everyone who's looking, you want to look at, what type of equity you have to give up and at what level you are, as far as, was an accelerator right for you at that time, or are you beyond that, I think is what I'd say.
So thank you. Look, we've got another panel that Steve is doing, and so we've got to wrap it up. I'd like to continue because I think there are lots of lessons here. I think the 2 big ones that I took away, and Karen was very kind in how she said it, right? Some people want to give you money at really low valuations. Some people want to get into your business and control it more. Right, so you really got to look at these not so much as an end of themselves. I mean, I got into Y Combinator, which of course is kind of cool, but what are the goals and how is this moving me forward? And you don't have to do everything they say, right? This is a sort of a general comment. So I just want to thank the panelists. It was awesome, but I think we've run our course, and we got to get into another panel with Steve. So thank everybody very much.
Thank you so much, Tom, and thank you everybody for New Pig Future Fields and Livestock Water Recycling for a really informative panel. Yeah, so before we get to Steve's panel, I'm going to call up Ali Barmel from Fasken. Fasken's been such a great supporter of VANTEC from almost the very start, and VANTEC's been operating for over 2 decades now, so that's how long Fasken has been supporting us. Ali Barmel provides advice with an emphasis on the food, beverage, and agri-tech sector, including startup and incorporation issues, shareholders agreements, financing transactions, including debt and equity, angel and venture capital, mergers and acquisitions, strategic transactions. He's got extensive experience with respect to board governance and often serves as a corporate secretary for a lot of the clients. So if you have any legal requirement in these areas, Ali is your man. Ali, would you like to say a few words, please?
Sure. Thanks for that very kind introduction, and hi everyone. I see lots of familiar faces and names, so it's nice to see. As Theodore mentioned, we've been involved with VANTEC for a number of years. We're proud to be a consistent sponsor and seeing lots of good companies come out of the program. Food, bev, and agritech is very near and dear to my heart. I'm very active in the space. I sit on the board of BC Food and Beverage. And my practice is kind of a bit of a dual practice. So I started off as a pure technology lawyer. And many years ago, I realized, as has been noted today by Steve and others, there's so much innovation going into food. And I saw this industry growing into something that is going to be quite exciting in Vancouver and more broadly than that. So agritech is kind of the perfect kind of mix of my technology and food and beverage practices, but I've got kind of lots of things in between as well. A little bit about Fasken. We're a full service firm, so we do pretty much everything under the sun for our clients. I focus on technology and food and beverage companies, and we've got kind of a program where we work with companies at all stages. So for example, we have a startup program which provides an affordable way for young companies to get the right legal advice at kind of lower costs. We like to grow with our clients through to angel venture capital financing, and then hopefully all the way through to exit. So a good recent example of that is Smart Suites. I started working with them 3 or 4 years ago on our startup program. We helped them raise seed capital, and then you may have heard in August they just had a very large exit with a private equity fund called TPG Growth. So that's kind of the approach we take, is kind of long-term with our clients all the way from startup to maturity. And of course, if anybody is interested in chatting about the startup program or anything else, or even just getting some general thoughts from me, I'm happy to do that, and look forward to seeing this food, bev, and agritech industry grow more and more in BC. And thanks to VANTEC for really pushing the envelope on the investment side. I think it's great for the community.
Thanks a lot, Ali. Everyone, if you want to contact Ali, his contact information is on our website agenda. Go to vantec.ca, click on today's event, and you'll see his contact info. Thanks. Now we're going to call up Steve back onto the stage. As you know, he's going to have a conversation with some founders, Barrowwise, Lucent Soilios, and Scout Canning, about how they sought the right investors for them across Canada and beyond. So this is all about raising funding from the right investors beyond our border. So Steve, I'm going to ask you to call up your fellow panelists.
Hey, fellow. Yeah, guys. So look, really pleased to have 3 panelists with us here today to sort of talk about this critical issue that I think many early stage startups struggle with. Got Jason Sparrow from Barrowwise. If you're not familiar, they've developed a compelling new technology around wine cellar management and automation in that capacity. Michael from Lucent Soilios, they've developed a really novel and interesting fertilizer product that takes advantage of and really capitalizes on waste streams in common waste streams in the ag space. And then finally, Adam from Scout Canning. If you're not familiar with Adam, really like his group. He's done some great work, but they're on a mission, which I think we can all associate with the values around becoming the most trusted seafood brand in North America. So all of these companies I've been following for a couple of years now and had the pleasure of getting to know them. They've all been through funding rounds recently and some in the past. And I just wanted to really dig into some of these key issues today around how you attract the right investor and how they were successful ultimately. So I'm going to start with you, Jason. Just if you may, can you just give us a quick sense for, I guess what is the right investor, or what kind of investor were you looking for in your latest fundraising, and then B, ultimately, how did you contact these investors and get associated with them, both locally and certainly beyond our borders here?
Yeah, thanks, Steve. So yeah, we cast a fairly wide net for this round. We were looking for a lot of sort of cultural fit aspects in investors. We were looking at some funds, a lot of angels. A few things that were important to us: expertise in the field, what sort of connections they could bring to the table, and the ability to follow on. But how we got in touch with them. So a lot of it was through events like this at VANTEC. So we did the circuit. We did the local circuit anyway, with the VANTEC Angel Forum, Valhalla, CDL. CDL was good for getting us in touch with a few folks from outside of the local community. But I think the most effective thing was we had some champions that were already investors in some cases, and some that were coming into the round that and several that are on this Zoom call that were able to get excited about the financing round and bring it to their friends and sort of promote it and get us meetings and vouch for us. And that's a lot of those folks that we were introduced to ended up deciding that Barrelwise was a good investment for them. Oh, sorry, Steve, I think you're muted.
Yeah. Sorry. Yeah, I can certainly attest to the value in having a champion on board. There's nothing better than having some infection around the idea and the promise of the story. So, and I can appreciate that. Michael, maybe for you next, do you want to describe, you've got some really interesting partners and investors. As I understand, you've been able to reach across and partner with some large corporates. You've got a relationship with PIC. You've done a lot of interesting things around your ability to push your story forward. Do you want to maybe just give us a sense for, some of the, maybe one or two key things that you've done to court partners and or investors, again, both locally and further abroad?
Yeah, I think, if you look at sort of the profile that we would be looking for, it would be a investor who has an, affiliation with Ag, right? When we raised a round last year, we were looking for angel investors, not so much institutional. And it was actually not very easy to find those type of investors. So we started in Vancouver, like VANTEC, like Angel Forum, but we also participated in Foresight and Accelerator in the Lower Mainland, and that gave us some good connections, but it did not really result in raising good funds. As a matter of fact, we transitioned to Seattle. And there's 8 groups in Seattle, did our rounds there when we started to get traction. And eventually we won the Seattle Angel Conference, and that sort of was the kickoff for other people to start tagging along as well. So that really helped us get things rolling. And then last year we signed up for multiple, ag innovation funds. So we applied with Protein Industries Canada, we applied with SDTC, and that put us in front of a whole bunch of other people who had more focus actually on the industry. We brought on Protein Industries Canada, and in addition to that, AGT Foods as one of our partners. And that sort of helped us get that sort of better focus on investors in the ag space. But if you look at the investors that participated in our round in 2019, none of them had any affiliation with agriculture. It was all family, friends, via network, and some investors in Seattle. It was actually quite interesting.
Do you think there was something about the story that resonated more in the Seattle community as opposed to here? Like, was there a specific issue or the way that you pitched the story differently down there, or was it just a different audience altogether?
Well, I think there is more appetite for risk in Seattle or in the United States in general. In that case, it was really interesting because Seattle is the place where of Amazon and Microsoft, right? We were in the Seattle Angel Conference. We were pitching against 40 companies that were all in AI and crypto and all these other things. And at the end of the day, it was a fertilizer that made it to the number 1 position. And it's really interesting because I think the driver there more than ag was climate change. And I think the problem is that a lot of people see this massive climate change problem, coming in front of us here and don't know what to do. I mean, everybody's recycling plastic and driving electric cars, but people want to do more. And I think that is sort of what's bringing people into this space now that don't have any affiliation with ag. It's being, want to be able to participate in solutions around climate change. And I think that was the big driver for a lot of people that invested in us last year.
Michael, what about, and Jason, this would apply to you as well. I know you've got a couple of U.S. shareholders. Do you find any impediments to working with U.S.-based angels or shareholders down there? Was that an issue at all in terms of sourcing the capital or papering the capital at all?
It was not an issue at all for me, no.
Yeah,
Okay,
not really, except for the fact that you can't talk to them in person because it's hard to travel down there. But yeah, I mean, for this last one, you couldn't talk to very many people in person anyway, so it wasn't much of an impediment.
No, fair enough. Adam, I want to rope you into the conversation as well. You've also got a pretty broad-based set of investors, some highly sophisticated investors, institutions in particular that are prominent in the CPG space. Do you want to maybe just speak to, your approach as you were getting off the ground in trying to court some of these, investors that were further afield and frankly more sophisticated than just angels?
Absolutely. I mean, we were just for Scout, we were pre-seed when we were raising. So, in pre-revenue, which is the most difficult, kind of round to build without any traction. So really, looking for investors who were going to be able to participate and come in more on vision and mission over, metrics that we just couldn't provide, for revenue growth. So those relationships took a long time to build, a year in the making, and looking at investors who are more focused on impact and who value your impact metrics equal to, a return and revenue growth. So we searched for investors that were really keen on food systems and keen on, culinary forward brands and have expertise in CPG and in grocery. And then it's just a matter of kind of keeping in touch, whether that's responding to blog posts they've written or posts on LinkedIn, recommending books, really any way to genuinely keep in touch with somebody and build the relationship, because ultimately investors are not going to invest in people that they don't know. It comes down, especially as a pre-revenue company, around trust in the founder. So it's a sales process, right? It's a numbers game too. Constant contact of new folks that you think are aligned around your values and your mission.
Right. Just on a related note, Michael, you had made a comment earlier, that you started to pursue some of these dedicated vehicles, SDTC, I think you mentioned, and that really helped broaden your network of investors. But maybe to speak to your general approach towards non-dilutive capital. I'll start with you, Michael. What kind of non-dilutive capital you've been able to get as an earlier stage company from any of the government-related agencies or otherwise thus far?
Yeah, I mean, obviously it starts with SRED, IREP. So those were the first sort of, IREP was the first series of grants we were getting. And then we went to, after SETC, after PIC, we got into the BC FAST program. We participated in, forgot some of the names, but the BC Ag Innovation Program. There is so many amazing programs out there. It's great to leverage those. And, the process is you go through quite some scrutiny. It provides not only money, but also credibility. And that's what I noticed. And it's great for BC investors. I mean, if you're able to get like your 30% EBC tax credit, and on top of that, 50% of your investment is leveraged through one of those non-dilutive funds, that's an amazing opportunity for investors in British Columbia.
Oh, for sure. Jason, similar with you, I presume?
Yeah, I agree with Michael entirely. So we've had support from Innovate BC, quite a bit from IRAP, a bit from MyTax and Shred as well. In the case of our recent round of financing, we had an IRAP contribution agreement come through just as we were kicking it off, and it really helped us build momentum.
That's great. And how about you, Adam? You're not in the traditional innovation space per se. I know you'd maybe argue with that a little bit, but your mission is quite different than most. I mean, have you been able to pursue any non-dilutive funding at all for your firm?
We have. I mean, we're innovating in canning, but it's also technology that's almost 200 years old. So it's it's an old school technology that needed a facelift and a bit of a wake up. So we definitely look at some innovation opportunities in our supply chain and manufacturing where we can leverage some technology and process and manufacturing for some granting opportunities. But the Atlantic Fishery Fund for us, which is similar to the Ocean Cluster that's out here in BC, but different funding mandates. And then we've, as a food and CPG brand, we've been able to tap into purchase order financing, which is it's a godsend for emerging brands to not have to use your venture dollars on sales growth and marketing and overhead, where you can just fund your raw materials and your inventory purchasing through purchase order financing. So we were able to secure almost $200K in debt for purchase order financing from a U.S. partner. Generally speaking, way harder to get alternative non-dilutive capital, I would say, on the credit and debt side in Canada compared to the US. I think we're getting a little bit better at that, but we all know the BDC can also be pretty cumbersome in their process, and it's typically easier to access those other non-dilutive opportunities once you've raised some venture.
Sure, that's helpful. Well, look, we are running short on time, but I just wanted to recap a little bit. I mean, I think it is important to cast your vision beyond the local community here. Certainly the local angels are very helpful for a lot of players here, but I think as Michael suggested, reaching across the border has a slightly different risk profile down there. And so there's certainly value in reaching out across there. I know with Jason and with Adam as well, they both reached out into sophisticated US investors in the South. And I think there's real value in being able to cultivate those networks early. So I commend you all for it. Just as a last statement I would make is just, I think as companies are thinking about this, this fundraising process, it doesn't hurt to reach out and get advice. That advice can often come for free. There's a lot of great people in the local VANTEC community who are very helpful and willing to make introductions. And, it just never hurts to ask, frankly. It can feel like a bit of an echo chamber if you've got a great product, but you don't have the network, but that takes time to build. But people have that and are willing to share it. So I encourage you to leverage the network here and certainly reach out to myself or anyone else around that'd be willing to help out. I'll leave it there and turn it back to you, Faisal.
Thank you so much, Steve, and thank you, Tom. This is a really great content that's very informative, and we're so happy to have you there. Everybody, there's a little button down at the bottom at the far right that says reactions. Send a little love their way because they did a fantastic job.